very young and smart enthusiast, Dr. Maulik Shah from Mumbai. He is a MD Pediatrics. He practices pediatrics, hematology and adolescent medicine in Mumbai. He is a very good clinician, an author, and a writer and a speaker. I participated as a F3 program 3 years back in the same webinar, and today he has accepted to talk on technical analysis and try to make the complex subject very easy to the listeners. I now request Dr. Moksha to take the platform and start his presentation. Thank you very much. Over to Dr. Molisha.
Yeah, thank you. Thank you, Ajay sir, and thank you, Pawan sir, for giving me opportunity to share little bit of knowledge what I am having, and ready to learn. Maybe during our conversation, maybe I'll also learn a lot of new things. So as the topic is about technical analysis, it's really close to my heart. So you know, it's very much natural. So beach mein, you know, in between there will be so please accept my these things, because it is going to come very much natural. I haven't prepared anything. I've just put the charts on our slides so that it becomes easy for me to, you know, pick up the and shortlist and you know, put it in sequence. Yeah. So, and we'll be having this thing also. In between we will have the live chart drawing also. So let's begin. Yeah. So yeah, I think, am I audible properly? Hello.
Yes, sir. Yes, it's clear, sir.
Okay.
Clearly
And
visible.
screen is also proper, na? Screen is properly visible.
Yeah, everything is fine, sir. Perfect.
Okay. Okay, great. So yeah, so technical analysis part 1, and we will cover a little bit of underlay indicators also. Now, what are underlay indicators? These are the indicators when we present any chart. These are the indicators which come below the candlesticks. So candlesticks are the actual technical indicator which we are going to decode now. And you know, this candlesticks, the price action, what we call, this is basically, it is called as a price action, right? So the movement of the price in the entire day, entire week, entire month is getting recorded in single that candle form. And that is the crux which gives us the entire statistics since the inception of the market, since the inception of the any script or stock. Yeah. So we will be going ahead. So general disclaimer, I mean, see, I'm not a SEBI registered analyst, and illustrations are here only for an educational purpose and not any recommendations. And see, I'm going to use the charting platform of TradingView. And mind you, I'm not any promoter or any direct or indirect beneficiary of the information source. It is just an attempt to provide, because that is a very user-friendly tool which is available. And these all charts which I have taken are from Google and from TradingView only. And I thank the creator of this platform who has made us easy, made the things easy for us. And another very important thing, the information provided in this presentation is truly the best of my knowledge and still subjected to interpersonal variations of interpretations. Yeah, because same chart might be, you know, understood in different ways. So yes, so candlestick of trading, and this is the great man named Munehisa Homa, and this is the person. He was a rice trader of Japan, Soyota or Sokota, some kind of district place. Very interesting and very knowledgeable person. He is the pioneer of this candlestick pattern. He used to, you know, make the statistics of daily price movements, ups and downs, of the rice price, and he realized something ki why can't we plot it in a simple way so that he can analyze over a period of time what has happened 10 days back or 15 days back, the movement of the price. And he is the founder of this candlestick, and we should be, I mean, for any of the technical analysts, we would consider him as a god, because he has made these candlesticks very, very easy for technical analysts to chart out. Okay, so I'll just decode what a candlestick is. Okay, so here, just a second, I'll just figure out laser pointer if, yeah. So is the pointer visible for everyone?
Yes,
Laser
sir.
pointer?
Yeah, it is
so
visible.
Yes, great. So see, this is a red candle. So we call it as a bearish candle or red candle, where the price opens at high and closes below the opening price. And in between the entire day, the fluctuation gets recorded in form of highs and lows. Okay. So for example, if we take a State Bank of India, today's opening price is, say, for example, 590. It during a daytime it went to 600, so this would be open price of 590. This is 600, and then when it closes down, before that it went to 560, so this would be the low of 560, and then it comes and close it at 575 or somewhat like that, so it is here. So this is how the chart gets plotted. Now the distance between open and low close price, we call it as a real body. Okay, and the highs and lows in apart from real body are in wicks. Okay. Similarly over here, this is a bullish candle. So when we see what are the bearish candle, bullish candle, so bearish candle is the one where the open price is high and close price is low, whereas the bullish candle is one where the open price is low and close price is high. That means what? The bull, if we say how the bull attacks, so bull is like this, if all his fangs, he pushes the victim up, and that's why we call the bull who is going upside, whereas the bear always hammer like this from upside down, and that's why we call it as a bear market in the going down zone. Okay, so similarly in bull, the bullish candle, the open price is low. Below that, when the while entire day the trading, the price goes below that is recorded as a low. It goes very much high, it recorded as a high. And when the close price, which comes below to some extent, that is a close price. I hope this is clear, because see, entire technical analysis is just an outcome of these concept at all. This is the concept which gives the entire price action chart the growth and the indications and all the indicators, moving averages, this Ikimoku and a lot of overlay indicators, which I think Dr. Trupti might be covering in couple of sessions. So those are indicators which are derived from these candlesticks. So these are the core, and the people who can decode these candles, that's more than enough. No other indicators are required, because these are the raw data which helps person to get the any transparent movement happening in the market. Okay, so now what happens is, say let's say an example of so why all this technical analysis we do. So basically it's a method of evaluating the securities by analyzing the statistics generated by the market activities such as past prices and volume. Okay, it is different from fundamental analysis. So basically all the statistics we get in the market trend, what was the previous day price movement, previous to previous day, previous week, previous month price movement, everything is been recorded in single particular chart, the way we call it as an Excel sheet kind of. This is an Excel for entire price movement. Okay. But here we don't see any fundamentals. So fundamentals like, financial growth, ROE, ROCE, P, price to earning ratio, EPS, earning plus price share. These all things we don't analyze in technical analysis. So basically, if you ask any technical analyst, they invest or they trade the price, not the script. So you give any chart pattern, demand of the any screen, any script, doesn't matter. The chart pattern, the person is ready to trade. It is that easy. Yeah. The only thing is, once we keep on handling the charts, don't need anything else. And why we do these things? Why technical analysis? Because technical analysis is one tool which gives us the study of the demand and supply. Okay. So what market is? Why the market exists? The market exists because of difference in the sentiments of the people. At one particular point, I feel the market might go down. At same moment, Ajay sir might feel the market is going to go up. And this difference of opinion creates a price movement. And this is where I feel the supply is going to increase, so I want to sell. Whereas Ajay sir expects the demand is going to increase, so I want to buy. And this difference of demand supply is getting decoded in form of candle. And this helps us to, predict, I would say, yeah, to some extent predict what can be the future movement. Why? Because there are some certain assumptions which we have seen over a period of time. And those assumptions helps us to predict something on the basis of technical analysis. And I would say one more thing, not necessarily whatever we predict goes true, because market is supreme. Let's believe it that. Okay. This technical analysis tool, and maybe for that extent, some extent, fundamental analysis also adds an edge over the other people. The knowledge of technical analysis adds an edge to the another people. But mind you, you always can go wrong because market is supreme. Technical analysis is strongly pointing that it is buy signal. You buy it and maybe market suddenly crashes down. It is very well possible. But the probability is the game changer, because once you have a good technical analysis tool, which can predict to a certain extent, you do back testing and you predict almost 60 to 70% of the time this technical analysis tool is going correct. That is the edge over the other people, and that is the winner, right? So what are those certain assumptions we would just like to know? So technical analysis, first assumption is it is the study of demand and supply, and market moves because of that. Okay. Second assumption is price always moves in trend. Either it is downtrending or it is uptrending. So if we see Nifty over a period of time since the inception, it is uptrending. So price is always in that move, right? Second assumption, third assumption is history repeats itself. So that we will be seeing in the chart. At one particular place where initially there was a support, again, this time also this might give a support. So once the price goes back, retraces down, it might find the support at that particular same level and ups. So history might repeat itself. And fourth important assumption is price discounts everything. So what these mean is if some event is about to happen, say for example, Reliance is going to produce the result of last 3 months, last quarter's result is going to be updated. Okay, so the insiders, the big people, the mutual fund, hedge fund managers, mutual fund managers, or the insiders means those people who are critically watching the Reliance stock, the performance, the sales counter and all. those people knows that this quarter result might going to perform stellar. And once the results are going to be updated out, the retailers might go for buying. And that's why these people, to get the benefit out of it, using their knowledge, I won't say that it is rigged, but they have that knowledge, they have that access to that knowledge, what is going to happen in future, and they take a benefit of that. So they already starts buying, and this gets reflected in the chart. And when this gets reflected in chart, if we have that technical analysis knowledge, we can stand by those people who have those knowledge, and you don't require that knowledge, because with the knowledge of technical analysis, you can actually plot out, yeah, something is happening, and you stay aligned with those people and you reap the benefit. Okay, so these are the basic assumptions, and we will see how these assumptions have been acclaimed over a period of time. So we will be having some charts where I would be explaining you all these things. So now the very important presentation what we are going to talk today about is price action. So it is about the movement of this candlesticks. Okay, so say for example, this is one chart. So see, this is the chart of Reliance, and maybe during 2021 or something. So see, this is a lower place where, you know, the price has been coming over here and jumping back, the price has been coming over here and jumping back. So probably there is some demand over this level at 1800. The big people, maybe mutual fund owner or big people, say for example, late Rakesh Jhunjhunwala or Radhakrishnan Damani, these people know ki, you know, this is a fair value. You know, most of the people about Warren Buffett, the fair value of the stock. So these people might be reading all those things, and they might realize that for Reliance, this is a fair value. And they are sitting over here, putting an trigger order, ki by 1800, I will be buying this stocks. And see here, the stock has jumped. Again, near 1800, stock has jumped. This time, what has happened? The people have realized ki, Arey Baba, 1800 per itna demand aa raha hai. This time it might not even reach 1800. So people have started buying at 1900 itself, and see, the stock is going above. Similarly, if we see here, there the people might be thinking, you know, this is not the fair value. Now we should decrease our position and see the dramatic downfall. Here it has not even reached over here. So what we can see out of this chart is history repeats itself. At 1800, once again jump, right? Similarly, the price is moving in trend, upar niche. So this is, we would call it as a sideways trend, and here it has happened that it is bullish breakout, you know, beyond this level. And so now from here, the chart is not going to come down, because this level, which was called as a supply zone, has now become a demand zone. So here onwards, the price might not go below this in recent future. Okay. Similarly, one more chart I would like to present. Say this is a Nifty chart just before COVID fall. You know what has happened? See here, this is the point of support. From here again, you know, the near this trend line, it has started zooming. And if you see this level, you know, this median line, what has happened? The price has been retracing from here. See, it's gone down. Once again, it reached to this level, gone down. Here also it has gone down significantly. So basically, this is how we can read technical analysis, and we can assume, or we can predict the probability of price reacting to this particular level. I won't say it always react. There is a probability. See, because here it did not return, it went up. Okay? Here it did not went up, it gone down. So there is a probability of price reacting to this level, not 100% sure, but we have to be ready for any kind of movement happening at this level. So this is the zone I think maybe Rajesh sir had presented that time, trading zone kind of. So that is a zone where you need to be really watchful. ऊपर जा रहा है, नीचे जा रहा है. This is the critical point where the market might react swiftly, and that is the place where we need to get aligned to this big player. So what has happened over here in this median level? Initially, this was resistance. The price was not being able to cross this level. It was going down, going down, going down, going down. Here also it gone down. Here it came. The sentiments of the market changed, and it boomed. So now what happened? At this particular level, again, now there is a supply which has gone converted into demand, and zoom again. See, once again, here when it broke, that particular area again became resistance, went down, went up, and now it has broken. So what we call this is a area of price action, where price action is very aggressive, either up or down. This is how we can predict, or we can take an opportunity to figure out closely what is going to happen next and get aligned to big players trade. And this is how we can reap the benefit. Okay, so this is precisely the reason why we always, we as a technical analyst are always very passionate about this thing, because it gives us, immediate this thing. Yeah, probably the price is going to react here, right? And these showing this these two charts, this one, we consider the assumptions what we were talking about here. The price moves in particular trend, history repeats itself. It's a way of analyzing supply demand, and we get aligned to that particular thing. This assumptions holds true, and that is why we feel like the technical analysis should be known to most of the people. And in fact, I would suggest maybe for investor people also, technical analysis is the easiest one. Going through the reports, yeah, people are passionate about reading. So I respect that, and I respect the knowledge what they have gained of analyzing fundamentals of the company, because that is ultimately the core thing. But when I did that fundamental analysis course, frankly speaking, I don't have that much of patience to read entire report each and every quarters the company is releasing, and the calculation, cash flow dekho, ROC dekho, ROE dekho, EPS, all those analysis are going beyond me. Whereas what happens is, after knowing all those things, ultimately what we predict, yeah, now the price might go up, and that will shoot up. Chart में भी पता चलता है. So for me, I feel either technical or fundamental, but any of this knowledge is must. Someone has to have either technical or fundamental knowledge, which is mandatory. Kuch to knowledge, we need some or the other knowledge. So here we would be decoding the things further. So what all are the probable tools by which we can apply this technical analysis or this price action on the real-time chart and reap the benefit out of it, right? So the very basic and most important technical analysis tool which one is supposed to know is Dow theory. Is the one of the first ever person who strategized this charts and chart reading. So what he has to say, the price moves in trend. And how do we come to know? If the price is making, so see, here was this thing dip, and then it went high, but it did not cross the previous high. So we call it as a lower high. And then when it fall down, it crossed below the previous low. So we call it as a lower low. So when the price moves in a zigzag manner, giving lower high and lower low, lower high and lower low, we call it as a downtrend. And for any of we people who are not a full-timer traders, we should not be looking on this side. So we should not be looking on any chart which is making lower low and lower high. Simple as that. Sabse pehla, first principle for us who are not into shorting business, we are in the people who are passionate about our own field. We are doing this as a side hustle, we can say, and to increase our income revenue or increase our cash flow. So we are like a investor or swing trader, maybe we can say, not a daily basis trader. So we do not short the position. We cannot sell high and buy low. We always buy low and sell high. So buying is a first arm for us, right? So this kind of chart we are not supposed to get into. When Dow says, when the chart starts moving, the price moves up, then comes down, but the low did not cross the previous low, that means it is called as higher low. When it started moving up, the high crossed the previous high, so we call it as a higher high. So when the price starts making higher low, higher high, higher low, higher high, this is called as uptrend. And this is the zone where we are supposed to align ourselves. Simple as that. This is very important and crucial principle one has to see for us. See, market is full of opportunity. The stock which we like, if it in this pattern, avoid. Don't give heart to that chart or heart to that company. Be very much objective. Pasand hai, but if you like that stock, keep it aside. Find out the chart which has higher high and higher low and align yourself in that particular segment. Got it? So there are some candlestick patterns which gives us some idea what kind of price movement is going to happen. So there are single candle pattern. So say for example, the first one, here what has happened is the close and high is almost same. The low and open is almost same. It is known as some Marubozu candle, which suggests the buying strength is really strong buying strength. So at whatever price you supply, there is a quick up move. Okay. Second most bullish one is this, which we call as a hammer, where there has been a dip to a lower level, but immediately the price shoots up by the end of the day and closes above the opening price. There is some candle where upside there was high, lower side there is low, but the candle is green. I mean the close price is above the lower open price. So these all are the type of bullish candle. No need to go in the names. It's okay. When it's ultimately what we need to understand, whether the price is moving upside or downside, that is more than enough. Okay. This is a neutral because here the decision has not made. There was high, there was low. The price is closing, open and close is very much nearby. So we call it as a neutral candle. Whereas here, the price has been rejected at higher level and going close very much below the high. So this is least bullish. So these are the candle pattern. We can just have a look, a visual impression. You need not know the names. This is known as Marubozu. This is hammer, inverted hammer, doji. These are also doji. These are high wave doji, gravestone, dragonfly. नाम में कुछ नहीं रखा है. See the concept. Okay. We need to understand these are the few patterns of the candle which can exist, and we will be seeing the charts how to decode them. So these are single candles. Such kind of candles would be there. Now there would be the pair of candles which create some particular pattern which we can pick up to analyze that yes, here something is going to change, and that are this. So there is something known as bearish harami. So this harami means a pregnant. So in Japan, harami word is mean pregnant. So the previous candle is pregnant of the later candle. That means the later candle close and open is very much inside the body of the previous candle. Getting? So if the second candle is bearish, a red candle, it is called as bearish harami. When the second candle is green, it's called as bullish harami. And similarly, what happens? Something known as engulfing. So if the second candle is bigger compared to the previous candle, where the open and close of the previous candle has been eaten up by the next candle, it is called as engulfing. So again, second candle green, bullish, second candle red, bearish. These all are the other patterns, okay, where the close is just below the half of the candle, and these are the other names. These are the other pattern. I think these all are the pattern which you can remember, but don't go very much into it. Focus on these two, at least these two patterns enough. Okay. So again, don't go in the name, just remember the patterns. Here how these candles are going to decode, we will be looking into the charts. So basically these are the emotions of the people, of the trader, and which we will be decoding when we see the exact chart. So just keep in mind, these are the patterns which we will be seeing in and out regularly on charts. Okay. So there is something known as triple candle pattern, and most commonly seen pattern, or the one which we feel like to trade upon, are these things: morning star, abandoned baby, or doji morning star. These are the candles here, where it's easy to pick up and trade also, right? So just keep this pattern in mind. We will be anyway seeing in the chart how this pattern looks and how it goes. Yeah. So what are the tools which we are going to use for technical analysis in price action per se? So there is something known as trend line. We will be demonstrating how to draw. Something known as horizontal support and resistance. There is something known as support and resistance zone, the area. This is some single level. This is some area. There is something known as first to return and fail to back. Okay. We will see that. Mostly this is part of rally based rally. So RBR is rally based rally. This is drop based rally, and another thing is gap. So these are the tools. Mind you, again, I'm telling you, we will be discussing all these things. You need not catch each and every one. Just master one particular tool, stick to it entire life. It is going to pay you off really well. Okay. So the first and very important tool is the trend line. Okay. So what is trend line? So basically joining at least two lows in case of uptrend, joining two lows. So here one.
Hello. Wow. Oh.
Dr. Manoj, can you mute yourself? Hello. Yeah. So when we join two lows and extend this line ahead, and you get an idea where the price can act the maximum. So see, similar, when you draw this trend line, just assume that beyond this, the chart is not known. I mean, you are sitting in this July particular date, and you have seen that you have made this trend line drawn, and see what has happened. This is a candle where lower wick is big. After price going down, the lower wick is big. That means the low was here. The open is at one. Hello. Yeah. Can someone mute Mr. So when you are here, you see that probably the price is going to act on this particular trend line. And see what has happened over here. The low has hit this line, and next candle, you see the lower wick is bigger. That means what? Even here, the lower wick is bigger. That means the low has been made, but here the demand was such that the price immediately came back and crossed above the closing price. Opening price. So this shows that it's a bullish candle, and bullish candle happening near trend line is something which can suggest us the trend is going to move higher. Again, that thing has repeated over here. Just imagine yourself getting aligned at this level. Just imagine. You have seen, you have traced this trend line over here at this level. You have seen the trend line has been drawn. So whenever there will be retracement towards this trend line, I will get aligned to this big player. Okay, this would be some layer of around 16,000, sorry. So Nifty at 16,000, you saw the trend line has been touched, and next candle is a bullish candle. What has happened? Followed by that, next one more day, the price on higher end. You take entry at 16,250 around, and see what has happened. And it has zoomed to around 18,000. This is the power of technical analysis. This is the power of how to get into this. Just use trend line, enough. Once again, see, if the price was moving high, once again here, it actually took a support, even at this, then moved ahead. But yes, this time they found the sentiment has changed. And here the trend line has been broken, gone down. Probably at this level, when we extend this trend line, this price might have reached here and gone down, maybe. Getting? So I think maybe we can see the live somewhere else. So say for example, this is a live chart. Maybe let's see, we will keep SBI. So see, yeah. So see, I would see that there was a fall, yeah, and this has happened. No, here there is bullish harami. Yes, can you imagine? Can you relate? This is bullish harami pattern, so probably a bullish pattern, and the price has started moving up, and you are at this stage. Okay, when the price is at 181, you plan to join the trend line. So you started. So here is a trend line. Okay, here are, see, trend line tools. If you can see, I have kept on the magnet. I will switch it off because it will create a problem to trace it. So here, and then you click and you extend it. Okay. So now you have joined two candles. Okay. Now you will wait patiently for price. So now after this movement, the price has started going up. So you will wait patiently for price to come down to touch this candle again. See, massive. Yeah. So you saw next particular day, the candle touched over here and then boom. After this, you considered let's enter because this trend line has been supported. See what massive. So you had entered at 209, for example, and closing of this day. Ooh, my goodness. It's at 523 high. My goodness. See, this is the power of technical analysis in front of you. So it might have happened. Say, for example, after seeing this massive big rally, and you saw this a kind of gravestone doji, where you felt like the supply is coming up, the price has gone down, and this candle, the price has gone down further. This candle also, you know, upper wick is big. So probably there is a lot of supply over here. We have sold over here, for example, but still the massive rally from 209 to 369 or 360, say for example, in how many days? In 2 months. So can anyone calculate how much return it is given from 210 to 360? Almost more than 50%, right? Yeah, because 50% would be 315. Yeah. So yeah, the thing, this is a weekly chart. So here we can change this thing. So here we can go on daily chart also. These are the daily chart. So it in case of daily chart, this is the 1 day candle. Hello. Hello. So this is the tracing of the daily chart. Whereas when you click over here, this is weekly chart, and see what has happened. So this is the power of trend line, the technical analysis in trend line. Got it? Going to next tool. So next tool is horizontal support resistance zone. So say for example, this is the level. This is again the chart of Nifty only. Yeah, we saw that price has been really consistently acting on this particular level. So here it touched, it zoomed up. Again, you know, the pattern. See the pattern. We will be discussing this pattern later. Okay, over here, and then once again, what has happened? A bearish haram, bearish engulfing. So there was a candle. It has some larger upper wick, which can suggest the supply is coming up, and then one big red candle, which has engulfed the previous candle's body. So this is bearish engulfing. So at this particular level, the supply is set in. Yeah. Again, at same level, the price is again retracing down. Again, when it came, doji, bearish candle, price is coming down. So see, now when I see that in this particular candle has zoomed really big, broken this particular resistance and zoomed up, when it is coming back, I have traced this. I have made this straight line drawn because I could realize that this is the area of price action where price is happening very, I mean, it's actively playing over this level of 11,000. What will happen after this? I would try to align at this particular level because it has been reacting here. Once it crosses up, I will place order somewhere nearby. So maybe 11,200 or something. I would like to place the order, or maybe we will still wait for price to come down, react, jump high, and then to enter. That is also okay. Whichever technique you feel like, and see what has happened. Zoom. So this we call it as a horizontal support resistance. One more tool. If possible, we will see demo of this also. Let's see. So Britannia. Let's take a chart of Britannia. Let's take a daily chart. So see this level roughly horizontal line somewhere at this stage. See what has happened. The price went here, the supply was there, suddenly it broke out. Then when it went up, came down, took a support over here. So this supply became demand over here. In second, the price moved up. This has affirmed me that the probably this is the level where the stock will be turning bullish. This level will become as an support, and here this place taken a support. At this candle, I have taken an entry at 4,205 and see what has happened. Oh, ooh, big, massive. This is horizontal demand supply or horizontal support resistance. Got it? Coming to next tool. I think we are going too slow. Sir, how much time we have? I need to rapid. Ajay sir. Anyways, we'll just go a bit faster. Okay. So there is something known as support and resistance zone.
Maulik.
Yes, sir. Yes, sir. I mean, how much time we have? Next 15-20 minutes or something?
Yeah, you can, you.
Yeah, so let's move ahead. So this is something known as support resistance zone. Now that was a single particular line. Now this is support resistance zone. So here we see again the bullish engulfing pattern, and we made a zone that probably this entire band can act as a support. And see what has happened over here. The price has been reacting over here and then zoomed up. Okay, again a nifty chart. So what we will do, I'll just explain all the tools and then we go to the live chart. It would be easier and would be a bit faster, right? So, yeah. So next tool is something like FTR, fail to return, and FTB, that is first to back, is similar like, you know, we go high. There is one candle, one red candle where the price is trying to coming back. So first to return, but then again, you know, it started rising. So we call this single candle as first to return. And when the price returns back over there, the people who had bought over here again start buying over here. So then it doesn't fall back, it rises up. So we call it as first to back, and then they goes up. So this is one of the tool, a bit underrated, but we have a lot of tool. This is a bit more on experience stand. So you can skip this just to, you know, fill up that this is one of the tools which is also present. The people do trading only on this particular tool and they are successful. So this is really interesting one. Okay, so drop base rally. So again, Nifty chart, this was the place where we saw. So the price was moving down, 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 lower low, lower high, lower low, lower high, lower low, lower high, and then zoom. Over here, a lot of consolidation has happened, and then it started going up. So here it was higher low, higher high, and then this low which has happened, it has higher low. It did not went below this, and this was a base form, and then this was a drop, base, rally. So when you see this kind of pattern where you see the price has moved above this consolidation phase, above this base, this is the beginning of a new rally. Okay, so this is how the technical indicators play. The price action, purely price action, nothing else is required if you master this. And mind you, mastering this is also easy. Just keep on seeing charts daily. You tend to see 10 charts daily. Over a period of time you will learn. Yeah, this basic knowledge is required. what are the, type of candles, that's enough. Now this is something, rally base rally. So it's a continuation pattern. So here it has rallied, the price is rallied, and some doji, two dojis just near the close, they have been consolidating over here, then started moving again. So this is something we call it as a base formation in between two rallies. So rally, base rally. This is also one of the tools. Okay, and maybe this tool is similar to this one. Someone is doodling, I think. Can we erase this? Yeah. Just ignore for rest of the people. Just ignore. Just focus on the screen. So so it is just like this thing, FTR FTB, similar to that. Yeah. So it has been, this rally has been placed. Rally, then base has been formed. Once again, the rally has started. So many of the people start taking trade over here, or maybe you can wait for this trade to come down, take a support, and then go back. It's up to you, right? And one more interesting concept is a gap. Now this gap means what? So gap is a place where there is no trading happening. It's a price where trading doesn't happen. Today, for example, the close of SBI has happened at 600. Tomorrow, SBI opens at 610. So this 10 rupees, the trading has not happened. And that is what we call as a gap. So these are different names of this different gap. And more than this name, we need to learn the significance of this gap. So common gap is somewhere, in between the price where it is happening. The breakaway gap is a gap where, previous resistance was been placed, but because the price wanted to jump that resistance, that has been the gap created. And this breakaway gap is really important, because this breakaway gap becomes really strong support zone. Okay, this runaway gap is like, abhi breakout ho gaya hai. The people are really in euphoric mode, so they keep on buying high. Yeah, it has been breakout. So everyone keeps on buying on nostalgia and in euphoria. So these are runaway gap. So very much likely that this gap gets filled up, and maybe this gap might give support, might not give support, but breakaway gap are really important gaps which will give really good support. And there is something known as exhaustion gap. So why I call this gap an exhaustion gap is because after closing this price, next day when the price opened high, and it came back immediately to fill up that gap. And probably that's why this is an exhaustion where, the euphoria is tending to get settled down. There are few people who felt like, nahi baba, this has gone really too high. Let's book the profit. And they are closing this gap. They are trading in the zone. And that suggests that there is some level of exhaustion coming in. And we have seen that after these 2 days, there was a sell-off. The last Friday, there was a good sell-off happened over here. Okay. So this is something known as exhaustion gap. So out of this gap, the breakaway gap is something which is really significant, where this resistance is becoming support, and this gap can provide really strong support. That's why probably in this downfall, what we are going to have now, in case if the Nifty is returning back, probably this 18,750, 18,900 would be really strong support for Nifty. Okay, so this is the significance of gap. This is one of the technical tools what we use. Okay, yeah, so these are the technical tools. Mind you, again, I'm telling, no need to master each and every tool. One tool is more than enough. Whichever tool you feel like, learn. Maybe you can repeat this PPT and you can focus. Keep seeing charts daily, 10 charts. Try to figure out whatever technical tool you are looking for and try to search those technical tools. Say trend line, say gap, or say support resistance zone, or whatever demand supply zone. Tend to look for those. Practice. Over a period of next 3 months, 6 months, 1 year, we will excel. Simple. Okay. Before going to live charts, little bit of underlay indicators. So what are underlay indicators? Are basically those indicators which are present over here, lower side. So RSI and volume we have kept because these are the tools which, really helpful. Rest of are derived. So these are few of the underlay indicators. So relative strength index, stochastic, volume, on balance volume, MACD, and many more. So I would focus majorly in relative strength index because if you master this one particular tool, it's more than enough along with price action. So few of the strategies what people follow in RSI is it's being a leading indicator, momentum indicator. It leads, it gives you a probability of future trend, and we will see how. Okay, few of the people they follow this overbought and underbought kind of criteria. So when the price is underbought, good stock, the people buy. When it goes to overbought, they sell. Few of the people follow more than 50 status. So once the RSI cross above 50, they buy. These are the few strategies. These are something which you need to understand. So a reversal divergence and hidden divergence. I will be explaining this in detail in next few slides. So just pay attention to it because this is something which helps to predict in a proper way in well advance the price action movement which is about to get happen. So this this is something humongous, big. So this is something known as positive divergence, whereas the the price is making lower low. See here it was low, the price has made lower low, but in RSI what has happened, it has made higher low. Okay, so when we are focusing on the upside movement for bullish divergence, we always draw the trend line on lower side of the price. Okay, so for positive divergence, when you see lower low in price and higher low in RSI, this is a positive divergence. And see, once you get aligned at this level, because frankly speaking, personally, I have bought BSE at 435. I'm still holding the position, and in this chart it is 596. Currently it has crossed 710, and this has happened in from April 2023 to current status. Okay, so of course this doesn't happen in each and every case of positive divergence, but this is one of the presentation where you can see the massive movement has come. Okay. Similarly, the negative divergence. So this is the place where you can consider probably to book your profits. So here what has happened, since this is negative or bearish divergence, so here we are drawing the trend line above. So when the price is making higher high and the RSI is making lower high, so see it has gone up, this has gone down. This is the time where you consider probably there is reversal going to happen, and see at this moment I would exit off this position. I will not exit at this stage immediately, but when the downfall is confirmed, the nearby resistance has been support has been broken, then I would exit. So this is negative divergence. Now what is hidden divergence? So this is one good this thing where the price is making higher low, but RSI is making lower low. This is hidden divergence, positive one. So again, for positive divergence, since we are drawing the trend line on lower side, and when the price is making higher low, RSI is making lower low, probably now the trend is going to continue. So this is a continuation. So uptrend, hidden divergence, uptrend. In the previous one, what was? Downtrend, positive divergence, uptrend, right? So this is a reversal divergence, whereas this is a continuation divergence. So these are the tools in the RSI which helps us to predict the trend ahead. Okay. Mainly I'm focusing on this thing because this is something which along with price action I use personally and giving massive and amazing results. So this is just to present one this thing, but not to confuse. That's why I'm not going to explain it too much. So just check on this thing, the positive divergence, positive hidden divergence, and negative divergence for exiting the position. Okay. And lastly, the volume. So again, see that BSC stock, here was the divergence which has happened in the previous chart. What we saw, what has happened here is the volume has raised. See, the volume was pretty okay, and suddenly the volume has raised. We trace this, this big candle. This suggests that it has gone above previous lot of levels with a high volume. That means the big players are getting aligned in this stock now. Their volume prints is here. This adds to conviction that the price is moving high. Again, here, see the massive volume coming at this level. Now, one of the reason why I did not exited this position is because this at 650 there was massive volume which has come on, and now the price is at 610. So I prepared this chart at some day, 4-5 days back. So that's why it is here. So this helps us the imprint of the big players getting aligned in this chart. So volume helps us. So I think in the lower underlay indicators, RSI and volume is more than enough. And anyways, trading view per se helps only 3 indicators other than candlestick in a free version. And I think this is more than enough. Having RSI volume is enough, right? So now going to some of the live charts which can just help us to add the conviction of what we are learning. So yeah, so this was a Britannia. We saw the horizontal line, yeah, horizontal support. Here the trend line. So what I would do is when I draw this trend line over here, see at this place it took support, it went up. At this place I would get and I would enter again in Britannia and see this. Once this comes here, I might try again to get entry into it here somewhere. And if it falls down here, I will exit out of it because this trend line has been breached. So now the price might go down. Okay. And see, this is horizontal level of resistance. You see here, the price has been constantly going down at this level. Let's see LT. Specific pattern. This is more so we can call it a sideways trend, not very trendy. I would avoid being in this stock at all as of now, unless it gives some breakout or some incentive to get entry into it, right? Say, Apollo Hospitals. Let's see this. Wow, good. So, see what has happened. This was a horizontal resistance. Return. Here, they broke the price. Zoom. Now here there is bearish haram. So probably the price might go down again. See here we can see the negative divergence playing it. So here if we plot, this is the lower price over here. and this was a high. Whereas if you see RSI, so can you appreciate the price is making higher high, RSI is making lower high. So probably this is a significant candlestick pattern which can reverse the price, and maybe this time we might hold at this level, maybe 48.94 somewhere, because horizontal support. Somewhere over here, or maybe at this level. But this could be a really strong support zone, because here it was multiple times it has found a resistance. So probably this would be a strong support zone for this place, right? So this is how we can correlate. Again, the volume over here and then downfall. Say one more chart. I think we'll take one last chart. Ajay sir, can you suggest any chart which company?
A bank Nifty we can do.
Yeah, great. Bank Nifty. Let's check Bank Nifty. But actually Bank Nifty, 1 second. Oh yeah, Nifty Bank डालू तो. अच्छा, हाँ. Yeah, so this is Bank Nifty. Okay. So here, if we see the price was really consolidating at this level. This was acting as a resistance, right? Maybe at this level, it might become a good support, probably, right? So, see, I think here trend line, I have drawn this trend line in weekly time frame. Either get trend line. Yes. So see this trend line. From here, here it came down and then traced upon. It went up, going down, up. Again, it took support over here, going up. Now see this, what has happened in weekly time frame. See this candle. It's a gravestone doji. So very much likely, especially along with a high volume. So very much likely that this is somewhere, reversal candle. But along with that, we need a confirmation. Okay. So then this might come back to some extent, might retrace to some extent, maybe take support again at this trend line and jump ahead, or maybe this time this trend line might get broken. Possible, very much possible, right? So here what has happened, say for example, this was a trend line breakout. At this level, it broke the trend line. And then it zoomed up, high. Yeah. And at this level, we do not enter, but at this level, we enter because it has broken the trend line and it has started making higher high, higher low above this. Okay. In case of RSI, में कुछ है क्या massive? Yeah. So see what has happened over here also. The price has made higher high. RSI it made higher low. lower high, right? It has gone down a bit down, not too much, but then price has started retracing down, right? Support, let's check somewhere where we can get support and resistance zone per se. So yeah, see if you see here, the price was been consolidating. So it was a rally, then a base has been created and rally. So this zone might give some support. Right? So this was rally, base formation, then rally. And this gave support over here. Even here to some extent, the price moved up. Is it clear?
Yeah.
Right? So this is how we apply our technical this thing. Right? So in Gujarati we always say Bhav Bhagwan che, Baki Badu Pakwan che, which means the price is God in charts, in technical analysis. Rest everything is noise. The Pakwan is a snacks of the food. So for technical analyst, whichever script you say, even be it RCOM kind of script, be it Suzlon like of script, the price action guides. Now it is going to give a higher move. The person can enter and make profit in upside movement, even on bearish stock also. So for the person who is technical analyst, script doesn't matter, the price matters. So we call Bhav Bhagwan che, Baki Badu Pakwan che. Thank you. Yeah.
Sir, wonderful, sir. That was a really, really very clear presentation by you on basics of technical analysis. Part one, price action and underplay indicators. Especially you talked about RSI and volumes. I think many of our participants, for them, it's a first time seeing the charts and being explained so clearly by you. Thank you very much, Dr. Maulik Shah, sir. We should all know, as Dr. Maulik Shah in the beginning introduction has told, these are probability charts.
Yes.
Probably history may repeat itself, but all said and done, an expert in the chart reading or technical analysis may go wrong at least 30% or 40% of the time, because it's a market which is erratic and which is not predictable many a time. If you master it, most probably 60 to 70% of the time, you may be right. Am I right, Dr. Malik?
Yes, sir. Yes, sir.
Yeah. So there are two questions, Dr. Malik.
Yes, sir.
Couple of them we will take, just two we will take. One is which time frame of the chart you suggest to use to evaluate RSI?
So, sir, it depends on our time frame. Why it is happening? Yeah. So we'll go in the charts section itself. Yeah. So basically, what happens is it depends on our time frame. So usually, I don't go below daily time frame, because we, being a part timer in this things, we should not go in intraday or shorter time frame. Daily is the best, and for a longer duration, weekly time frame is more than enough. So technically speaking, I do evaluate daily, weekly and monthly charts, but daily is good enough, because most of our positions, we hold it for maybe 2-3 months, 3-4 months. For that, daily time frame is enough. And for investor kind of people, I suggest them to go for a weekly charts.
Okay, sir. And one more question by Dr. Sunil is there.
Yeah.
Sir.
One second, sir. Ye dekho. RSI negative divergence over here. Classical. Ye price higher high, RSI
lower low.
lower low.
Yeah.
Lower high, I mean. And see
Okay.
then what has happened. Down.
So it's a
Has gone down.
positive diversion, sir?
This is negative divergence. I mean, because price has made, that's why we have drawn this line above the negative divergence. The price has made, see, basically what happens is RSI is a leading indicator, you know. So RSI will always give a what expected movement ahead. So if RSI is making lower high, that means the price is going down. The probability of price going down is more. Getting? So similarly, in that the positive divergence, the example what I shared, yeah. So in this positive divergence, what happened? Ki RSI made a higher low. That means the price went upside. The RSI went upside. So price is probably going to go upside.
Up.
Okay,
Right.
so RSI is leading indicator. Probability of 14 days next, what can happen? So RSI is a leading indicator. So that's how agar RSI में upper zone पर if the RSI is going above, the price is also tend to go above in near future. It goes that way. So here very classical what we could see was negative divergence. The price went high, but RSI went low. That suggests that price might go down. And see, there was a fall.
Yeah.
So this is what happens over a period of time. Now, I see you are in front of chart and something picks out. This was very spontaneous impromptu which happened suddenly while we were talking, and this came into vision.
Yeah. So the question is, people are asking what website you suggest for this particular chart. I think you are using TradingView, sir.
TradingView, best
Yeah.
sir. Free, no expense, and real time also it is available. It mobile app is also available, and this is quite user friendly. So here you get this thing, you know, all kind of trend lines, so horizontal line, trend line, arrow, ray, you know, and many of them are we don't use also. For support resistance, we zone, we use this rectangle, you know, you can mark this rectangle, circle, which I had just to teach this circle and ellipse is important. We can write the text also, lower low, lower high. This is for future prospect. Like if you see like this was a place where I feel I might take an entry, you can write those also. And there are other lot of these things also. So you know, these all things maybe Fibonacci Trupti madam might take, and these are the sorry, and these are the indicators from where you get lots of there. Itne sare. RSI we get from here, volume we get from here. Easy, very easy to move. And here it's a you know, the time frame we can select. You can select the
Yeah.
stock name. Pretty easy.
So I think we should request our participants to go through every day, or at least spend a lot of time seeing the charts of various assets.
Sir, I would suggest not at all lot of. I would suggest only 10 charts. More than enough. Daily 10 charts karenge na sir. It will give
lot
really
of times they should see. What I mean to say, not lot
yeah.
of charts, see lot of times. One chart see
Repeatedly.
10 times.
Yes, repeatedly you keep seeing chart and suddenly like this it will pop up. Something you will be, and yeah, maybe this PPT should be enough for them. So maybe you know they should know about the candle. So just like this, you know, a kind of candle. This is bearish engulfing candle. So such kind of candle patterns they should know roughly. Yeah, this is a bearish candle. So here something might happen. That's enough. So after having some knowledge, they just keep on applying on chart, keep on seeing daily, and the things will be smooth.
So I think we don't have time much to, though it is so interesting, you're making it so easy to learn to our participants. I'm very glad out of a lot of time have been spent, and then we have learnt a lot, including myself. And we will have further few more sessions by you and other speakers on technical analysis. Dr. Harish Gopal sir has planned it out for next 2 months.
Yeah.
Thank you very much for once again on behalf of Pediatric Academy of Telangana, and also on the team F3, and also for this series of financial intelligence for pediatrician. I request if Dr. Harish Gopal sir is there to conclude.
Yeah.
Sir, are you there? I think he's not there. So thank you very much, sir. We conclude now and we'll close the session.
Yeah. Thank you, sir. Thank you. It was
Thank you,
pleasure being here. And I hope I have added a lot of value to the people who are listening.
Definitely, sir. Definitely.
That's an,
Please be there. Please be there in the week for answering in the WhatsApp group some questions, some clarifications, which our participants.
I'm there.
Yeah.
I'm there.
Thank you.
I would
Thank
just,
you very much.
I would just request, technically, because I am into a lot of things now. So maybe if anyone wants to ask specifically question, so maybe you can tag me so that I can know, okay, I need to answer this, because many of the times I just, brush up everything. So sometimes I might miss out some questions. So in case if anyone wants to ask, maybe they can tag me so that I'll come to know, okay, there is some question and I'll answer. So that would be a request to everyone.
Fantastic.
Yeah.
Yes, yes, sir. Yes, sir.
Thank you. Thank you very much.
Thank you very much. And we will now close the session and conclude today's program.
Thank you, sir. Thank you.
Correct.